Leaking top insider stock trades every day until they stop us, November 6th. We had a big increase in the number of insider trades coming in with 249 new insider trades, and it was another pretty bullish day with over 40% of the unscheduled trades being buys, which is well above the median of 33%. We had a couple of pretty big earnings wins with CS Disco up over 10% and Shift4 up over 10% after we found insider buying at both of those companies, but I'll probably make a separate video going into those a little more. Starting with ONEOK, we found a director buying $165,000 of the stock. This is his third largest purchase all time, and he hasn't bought the stock since early 2023. He also has a pretty good track record, averaging 15% 3-month returns and almost 60% 1-year returns with a killer 100% win rate. The stock is also trading at its lowest EV/EBITDA multiple in the last 5 years, but the stock price is lagging quite a bit, down 30% in the last year and 11% in the last 3 months. They had an okay earnings where they beat EPS, but they missed revenue, but they were able to increase their revenue guidance, and so they were up a little bit after earnings. As always in these situations, when the stock has been down quite a bit recently, which is most insider purchases, I try to avoid catching a falling knife here and want to wait for it to get above some of those moving averages before I take a stab, but this is a pretty high signal insider trade. Another interesting insider trade was a director at OneSpan buying $600,000 of the stock, which is his largest purchase ever. He also has pretty good returns, averaging 21% 3-month returns and 44% 1-year returns with a slightly worse win rate coming in at 70%. This stock is also down quite a bit, down over 23% in the last month after a poor earnings report. They're a security authentication and identity company that got hit pretty hard after earnings after both their EPS and their revenue fell due to increasing costs, partially due to an acquisition they had done earlier, but mainly because their hardware segment revenue fell a lot faster than they were expected as more and more businesses are converting away from hardware solutions to software and app solutions. So the overall revenue fell because of this hardware segment, but their software segment is now about 80% of the company's revenue and growing very fast at 12% growth. So as this hardware segment continues to decline, as it's becoming less and less popular, it'll have less of a negative effect on the company, and the software segment should make the company look quite a bit better overall. Obviously, it seems like the director agrees here, but with a similar situation with all these, the stock is trading way below its moving averages, and we want to avoid catching a falling knife. So you could try to take a stab here and maybe put a stop loss at the low from after its crash after earnings, or just wait for it to get above the 20-day or the 50-day, and that way you know the momentum is moving in the right direction. Find all the top insider trades at CEOWatcher.com.